Hi everyone, Gianni DePoce here with you for TheoTrade, and today is Tuesday, the 28th day of January 2025, and we have only a few days left in the month of January. And as the saying has gone in markets, it goes like this: as goes January, as goes the year. Now, there are some holes that you can poke into that statement, but I say that because we had quite the start to the week yesterday. We saw a massive unwind in the AI trade and a lot of the utility companies associated with it after reports over the weekend surfaced from China about their new AI program called DeepSeek. So markets took it on the chin yesterday, but we have recovered very nicely. I wrote an article for the free Sector Leader Bullseye newsletter that you can see on TheoTrade.com, talking about how after last week's close, we saw nothing but positive flows, positive money flows into the right sectors of the market last Friday. Basically, the way we ended last week told us that we were bullish. And in fact, the S&P 500, the Nasdaq, and the Dow all closed at their highest weekly levels in history last Friday. And as a rule, the way I read the markets, the way I read the charts, that is bullish price action. And so we must remember that one day does not make or break a trend. And so yesterday's sell-off was very exaggerated. As you can see, the S&P 500 recovering very nicely and almost back to where we opened yesterday in the futures market. So we're hanging out still here, going sideways. The path of least resistance does appear to be higher. And as you can see, we never made any sort of meaningful higher low lower high or lower low on the sell-off. Instead, you could make an argument that this was another higher low. So I don't think anything's really changed in the bullish scheme of things. We're seeing the NASDAQ outperform by quite a wide margin today. And one of the themes that I want to talk about is the emerging strength we're seeing from the software sector. So first, before we do that, let's take a look at the chips. Okay, semiconductors, we know, so very important to the tech sector overall. They took it on the chin very hard yesterday. Multiple names in the space down 20% or more. Nvidia having a historic drop. Now it's up almost 7% on the day. So a massive unwind on that front. And a lot of names in the sector, quite frankly, have broken charts. That doesn't mean that the whole market's about to roll over, but you have heard me talk about for many, many months now how I need to see semiconductors make a new all-time high. Well, we're probably going to have to wait a little bit longer now before that happens, and that's a bit frustrating, but at some point, I think it could happen. But what I'm looking at now, new leadership emerging from the tech space. I really like what's happening in the software sector. A lot of the software names really took that news yesterday in stride. And you can see here looking at IGV, a software ETF, nothing but higher highs and higher lows on this chart. So let's not forget how large and encompassing the tech sector XLK really is. Nothing really changed. I mean, even on this ETF here, XLK, you just came back down to test former resistance turn support here, and you didn't even make a lower low. So to me, yesterday's sell-off was just very exaggerated, probably a dip buying opportunity if you had cash at your disposal. And I'm looking for markets to rebound and eventually make a new all-time high. You know, you look at the Dow really bucked the trend yesterday and is within a spitting distance of new all-time highs. So that is not something we would see in a bear market. Let's take a look at some of the big tech names. You know, Apple printing two very strong days in a row. You know, aside from Nvidia, the Magnificent Seven names looking very strong. Amazon, new all-time high. Google continues to consolidate near its all-time high. Okay, Netflix hit a new all-time high just last week after its earnings beat. You have Meta hitting new all-time highs today as well. That is bullish. That is a good sign. That is not something we would be seeing if the market was about to roll over. Even Microsoft took it on the chin yesterday and has recovered all of those losses. So I think that we're going to see this positive momentum spill over into the back half of the week. We have a lot of earnings when it comes to Tesla. We have earnings on Tesla tomorrow. I still have that position on Tesla from when I backed up the truck back in September and October. We did make that a regular position. We parked the Cybertruck, so to speak, and we've been holding through that sideways consolidation over the last couple of months. And as a rule, sideways price action near the highs of a move does tend to unfold in the direction of the trend, which in this case remains very solidly upward. We're seeing the dollar make a nice rebound here today against both the Japanese yen and the euro. You know, a lot of the tariff talk kind of scaring global capital into the safety of the dollar. Bonds are selling off a little bit today, but nothing too serious here. But energy continues to be off of its high. We were down earlier in the day. We recovered a little bit. I still think that the disinflation setup is there, and that's proving to be very strong for gold, which also closed at its highest weekly level in history on Friday. So that is something that you would see in a market that is either breaking out or about to break out. And so we had talked about some names and setups in this space. Before Alamos Gold, we do have a position in Agnico Eagle Mines, looking to expand our footprint in the precious metal space, kind of an under the radar development that's playing out right now. And then, of course, we need to look at what's happening in crypto. It's a quiet day, still hanging out near the highs. Ethereum still struggling to get a bid, but I will tell you that I did buy the dip in Ethereum yesterday. I think that we will see some sort of squeeze play out in the Ethereum space. There's a tremendous short position, MicroStrategy treading water here. But you know, as long as we're above our stop losses, I'm okay letting this kind of run out the clock. We know that these markets can get explosive and start to move very quickly when they do. But again, you know, back to the whole software theme, names like Cloudflare doing very well. A lot of names in the retail space holding up very well. Dick's Sporting Goods, okay, hitting a new high just a couple of days ago. That's a classical breakout, a very strong textbook pattern. Now, we can look at the consumer discretionary ETF and say, hey, you know, it's dominated by Amazon and Tesla. That's well taken. But if you dig deeper into the consumer discretionary, the retail space, it's very clear that the market has a positive outlook for the consumer. The top performing sector last week was communications. You don't see that in a downtrend. Financials closed at a record high yesterday. Not something you would see if we were about to go into a market meltdown. So just remember, in this tape, cooler heads prevail. Even if you took it on the chin, I had a bit of a drawdown yesterday too. Don't change your process. Stick to your rules. The market's not going anywhere. No revenge trading. No looking to make your money back as soon as possible. We need to move with the ebbs and flows of the market. And I'm already, picking up new trade ideas today as I'm, looking at this tape. There's still a lot of really good setups there if you're willing to look. So we talk about this in the Trinity trade. We talk about this in the Theo live room. So if you want to learn more, that's where to find us. So thank you so much for watching, and we'll be back same time, same place next week. Thank you.